So the next big investment opportunity is not going to be Nvidia. It's probably not going to be GPUs, and it's also not software. So if it's not all those, and it's also not the next ChatGPT competitor, what would it be? Well, let's take a look at a bottleneck that is impacting AI. The next bottleneck that could determine who wins this AI race is something much simpler: electricity. So right now, the world's biggest technology companies are spending hundreds of billions of dollars building AI infrastructure. But there's one major problem. They might not have enough power to run everything. So today we're going to look at why electricity is becoming the most important resource in artificial intelligence and which stocks could be positioned to benefit from this massive shift. So let's jump into it in this video. Hit the like button, subscribe to the channel if you haven't already, and make sure you guys come back. I'm going to give you guys some, alpha today. So the AI power crisis. Let's talk about that because I'm not hearing too much about it just yet. So, for the past few years, we've noticed investors have been obsessed with AI chips, and for a very, very good reason because they're needed, right? But now companies like Nvidia have generated enormous returns because every major tech company needed the chips. They needed GPUs to train and run their AI models. But now the conversation in the stock world is changing. The problem's no longer getting enough chips. I mean, that still can be a bit of an issue, but the problem is finding enough electricity to power these chips. Just think about it. Every new AI data center contains tens of thousands of high performance processors running 24 hours per day. And these facilities are going to consume staggering amounts of energy that we just simply don't have. As Microsoft, Amazon, Meta, Google, and others are continuing to expand on their AI operations, power demand is exploding. Industry estimates suggest that we hyperscalers could spend hundreds of billions on AI infrastructure just in 2026 alone. So, and here's the point that I'm trying to make here. You can't simply flip a switch and create more electricity. That's just not how it works. Building generation capacity takes years. Building transmission infrastructure takes years. And many regions are already struggling to meet project demand. And that's why investors are beginning to shift their attention from AI chips, also to the companies that are actually powering the AI revolution. Now, let's take a look at a couple of stocks that we could potentially see benefiting from this. So this is our first one. We are taking a look at Bloom Energy. So Bloom, this is a company highlighted as a potential beneficiary. Now, Bloom develops fuel cell systems that can generate electricity directly on site because this is going to be very, very beneficial. Why does that really matter? Well, because they need power now. That's simply the way it is. Bloom systems can basically provide localized power generation that helps bridge that gap until infrastructure gets built and things become a bit more reliable. The company recently reported first quarter revenue growth of approximately 130% year over year. Now, this is showing just how quickly demand is accelerating. Now, for AI investors, Bloom represents a direct bet that data centers are going to increasingly look for alternative power solutions as grid constraints become a lot more severe. So, stock number two, we're going to take a look at. All right, share this one here. All right, so this is GE Vernova. So this company builds many of the gas turbines being ordered to support the expanding power needs, and demand is absolutely booming right now, guys. So according to recent reports, GE Vernova's turbine backlog and reservations reach roughly 100 gigawatts. That's a massive amount of power. Why are utilities and data centers operating so many turbines? Well, because natural gas remains one of the fastest ways to add reliable power generation capacity. Renewables are extremely important, but AI data centers need electricity every second of the day. So gas turbines do provide that dependable baseload generation that can support those facilities when the broader grid upgrades continue. Makes sense, right? It's almost like one of those quick fix now, and we can use this while everything's being developed, right? Very, very simple. The next one that we're going to look at here, one sec, share this here. All right, so this is Vistra. So, what's interesting about this company is the growing role in nuclear energy. So, nuclear power is suddenly becoming one of the hottest themes in AI investing. Why? Because, well, nuclear power plants generate massive amounts of carbon free electricity around the clock, and they're very dependable. And this is exactly what AI data centers do need. Now, they've already signed long term power agreements connected to major technology companies, including Amazon and Meta. Now, this trend could become much, much bigger. Other companies catch on, basically, and many analysts believe we're entering into a nuclear renaissance, driven largely by AI's enormous power requirements. Now, so let's talk about the real AI winners here, guys. So, here's where things are going to get really interesting. Every AI cycle creates obvious winners, right? We're going to see this cycle go because AI is the big picture, right? But there's going to be these sections inside the AI industry that are going to basically boom. In the beginning, we saw Nvidia blow up. Everyone knew chip makers were going to benefit. And the biggest opportunities often came from the second order effects. Electricity might be the second order effect that we haven't seen yet. So keep a very, very close eye on how this is going to play out. We're already seeing industrial companies, utilities, construction firms, power equipment manufacturers, and infrastructure providers outperforming as AI investors are realizing that there's much more than just semiconductors, right? So the AI build out is increasingly looking like an industrial revolution. Data centers need power, power plants need turbines need steel, networks need transformers. You can see where this is going, right? And everything basically needs electricity. So that's creating opportunities far beyond technical traditional stocks, right? Could this become bigger than the chip trade? Well, what happens if AI demand keeps growing faster than power generation does? The answer is pretty simple there. Electricity becomes one of the most valuable commodities in the world. When you guys think about it, how many years have we been focused on renewable energy? We've been, building wind turbines, we've been building, tons and tons of additional resources to power our grids. Just recently, actually, this winter, in Nova Scotia Power Corporation, which is our only power generating entity in my province in Nova Scotia, they actually during the winter messaged us and told us during a storm to try and reduce our power consumption because otherwise we were going to have rolling blackouts in a first world country. That is absolutely insane. That's a bit scary because yet they're trying to push, EV cars. Heat pumps are a huge thing in my part of the world. We have increasing demand on our electricity grid, and now we're adding in adding in, you know, uh, sectors like AI that's just going to absolutely consume every little bit of extra energy plus and demand more that we don't have. And it gets a little bit scary. So companies that can generate, store, distribute, or optimize power could become some of the biggest winners in the next phase of AI. So the market spent the last 3 years chasing computing. The next 3 years could be about chasing electricity. So if that happens, stocks tied to energy infrastructure may become some of the most important AI investments on the market. I just wanted to give you guys that information, food for thought, right? So just kind of get that out there, just to get you guys, interested and thinking outside the box, because following what everyone else is doing is not always how you make money, right? It can be beneficial. It can help your portfolio. It's a nice base sometimes, but sometimes you got to take risks, right? And with risk can come reward, or it can kick you in the butt. But if you have a balanced portfolio, it's not something that you should really worry about. Going outside the box a little bit and adding some even lower cap energy stocks would definitely be a very, very good idea to start looking into. So that's just some food for thought, guys. Take it as you will. None of this is financial advice. I just wanted to get the ball rolling in your head and kind of give you guys a little bit of a heads up. So that's what's going on. Thanks so much for tuning in, and I will catch you in the next video. Peace.